Again, just a reminder, I'm just talking and thinking out loud tonight.
Welcome
This is
back,
not meant
folks,
to
and
indoctrinate any of you.
it's a
I'm
good
not trying to
morning
win
here
you
in
over to Jesus
Nigeria,
because guess
and
what?
this is
Jesus
one.
has to draw you first. I can't make you believe.
Good morning, and this is 12 minutes after 1 in Nigerian time. I hope you all have a great day. I hope it was a great day. I definitely, I really extend this video to late hours because in late hours in Nigeria because the market actually closed in Nigerian time by 12. Uh, and which is a concept I had really want to dive into to explain some certain criteria for you guys. If you in Nigeria, irrespective of the time zone, you change your trading view to whenever it is 12 o'clock or 11 o'clock Nigerian time. The trading view will definitely show you that the whole day has closed. But according to New York time zone, they close by 00 GMT, which is either 12 o'clock p.m. before their candle close. And if you deep down and study this difference in time from our country out of New York, you definitely find out that before New York closes, there's always a very mostly not all the time that there is always a very significant price move before that closing period, and that is related to those that trade the New York PM session and those that trade the Asian session because Asian is from the Asian trading session is from 7 p.m. to 12 1 a.m. right in New York time. I'm referring to New York time, not Nigerian time. So all these differences in time is another criteria that as a trader you need to study because this market is driven by time before price. The time of the day speaks a very has a very great influence in price and all that. So on our daily business, this is the euro dollar daily contract, and this is the today price delivery. You can see this price delivery that traded into this discount failure rate. It's today's price delivery, and you can't say anything about it because this is how I have call it out yesterday, and perfectly it delivers. Okay, and I don't know what to say next, but let's dive into the statement I have said. I have actually go through them. I write the statement before starting the video. So the Euro US dollar daily contract for Wednesday, 17 January 2024 deliver perfectly as called out from yesterday. Now, the Euro US dollar price delivered lower into the daily fair value gap or BC, which is buy side imbalance, sell side inefficiency. That is, it is a buy side imbalance and a sell side inefficiency. I don't know. Into the consequent encroachment of the fair value gap, or otherwise, you can still refer to that as the inefficiencies and purge into it like a mohawk, which is permissible by ICT, meaning that today price really did trade into the consequent encroachment of this daily fair value gap and purge a little bit below it, which I don't know, ICT usually call that a mohawk. That is something that just purge a little below its initial call out, and that is what he referred to as a mohawk, and it's according to him and according to my own according to back testing this and for testing it every day, I have come to understand that it is really permissible because sometimes it will do like that and still play out the way it's supposed to play out. So it's really permissible, and it is very good that you yourself you keep an eye on that and study it too. Okay, that's if you are watching this video. I am very pleased with the price delivery of Euro US dollar today, as the sell side has been taken and market trade into the consecutive treatment of fair value gap. I just added this to say that I am very pleased with the price delivery of today, as the sell side that was called out yesterday was taken and market delivered into the consequent encouragement of the fair value gap. Now, casting forward, we can now conclude that Euro US dollar is ready for sell buy side delivery, and the low of the day should not be traded to. That is, if market is totally bullish. That is, if we are beginning to be totally bullish, we should not expect this particular low, which is this Wednesday low, to be pushed or to be traded into. So that should be a very significant low, and market can either trade to the consequent recruitment of this week, or tap into this the high of the fair value gap. So that being said, let's check on our euro contract. Sorry guys, I mean the euro, the DXY daily contract. So this is the dollar index daily contract, and as you can see that we did call out this area yesterday, and I have removed all those some of those PDRAs I note in charts, but I am very careful of them whenever price get to those areas. So although I remove them, but that doesn't mean I neglect their effectiveness in price. And markets deliver into the bearish daily bearish order block, and we tap into almost getting to the consequent encroachment or the mid threshold of the order block, but we did not get to it. And now we reverse lower, and and we close above the sorry, and we close below the daily order block, and this is a very significant high. And I think most traders refer this particular candlestick is called doji, the doji candlestick, the pin bar, or some call it doji, some call it pin bar or hammer. I don't know any of them, but this is a very significant candlesticks. This is a very significant candlesticks that mostly refer to a reverse in price. Okay, you can you know look into that yourself as well, and you can see how it also delivered into the price, and the high we should not we're expecting not to see the high taken out. So that being said, let's go into the 4 hourly contract on the euro dollar. So this is the euro dollar 4 hourly contract, and I have this short statement here to support what you are looking at, and I will explain. Now, the euro US dollar 4 hourly contract shows how nicely price delivered into the consequent encroachment into the intraday price action. Now, the 9 o'clock a.m. 4 hourly candle delivered the buy program after sweeping the sell side liquidity, meaning that this particular candle is a 4 hourly 9 o'clock candle. Now, why I mostly sometimes I don't refer to, there is a sale program here also for today, but mostly when I do call all this kind of thing, I do refer to the one that supports my bias, because if my bias is bullish, I'm going in with a bullish mindset, with a buying program in the back of my mind. So I'm not going there to sell. Even if there is a sell opportunity, I am neglecting them and I'm sticking to my bias. So that's what I do, and sometimes I do fail, I do take a loss, but I appreciate taking a loss, because I can, if I take a loss, I can see where I was wrong in my bias, what makes my bias wrong. And well, I wish I could be very flexible to easily interchange, but since I am not really that experienced in this market, like I've not done more than, I've not even reached 5 years in this market, or 7 years, before I can even think of switching my bias, being so fickle with price. So I'm trying to stick with my bias and work with it, since I can see evidence that I am able to call out the next day candle and how I want it to be, and it will be, if not perfectly, but almost, and if not almost, but the same, the way I call it out. highest, it might just have a change in a little flexibleness in the price, which is something I am learning to go through them. Okay, like if I call out, like today candle, I did call it out yesterday, and when I call it out yesterday, today I was trying to trade it, and the fickleness in the lower time frame is kind of detrimental to me, and I am trying to be able to be flexible with them as well. So these are the things that you, as a trader, you will be going across, and you will try to, as much as you can, to pass it by as time goes on, but not, don't let it weigh you down. So, and that is why I make sure that each and every day I don't take more than one trade. So if I take one trade and it lost, that is it for it. And so because of that, I mostly, I mean, one trade in London session or New York session. That means if I get a perfect trade in London session, I take it. If I get in New York session, I take it. So which is total of two trade, but one for at each session only. And if I get on London session, if I'm going on New York session, I am going with half of my position. So that New York session is just like a prize reading for me. So I just wanted to, I think I like sharing ideas like this because it will also help you coming up, because I know many of you that are watching this video that are actually newbies. So we all newbie in this game, okay? No, but I'm not saying I'm kind of master or something, but we all better than each other. Now, casting forward, we can use the down close candle to support the 4 hourly down close candle to support the bullish bias, meaning this particular last down close candle, we can use it to support our bias going forward, which if we trade, if this at particular 4 hourly candle trade above it, then we can now use it as a bias going forward. And I'll be very pleased if market did price in, just come below and touch this blue line, the beginning of this blue line at top here, before we start going up. So that would be very amazing. And this sell side liquidity I just identified, I don't want to see it touched again. That means if price has to come back and touch this place again, that is a red flag for me. So let's go to the DXY, which is the dollar index. So this is the dollar index, which is the XY. As we call out yesterday, that this bearish breaker block, the belly breaker plus a fair value gap, and CB, which is sell side imbalance, buy side inefficiency. You know, we did call this out yesterday, and as call out, the market trade into it, and use it to, we did, like, it did not go above it, and the body of the candle respect that area. So going in forward, we can also see there's a swing low here, which we looking to get taken out, and this gap here, we want market to feel it, retrace back, and continue. Start giving us our overall sell side delivery on euro, on dollar index, and giving us a buy side delivery on euro. So I hope with this explanation, you can, it gives you a clue going in tomorrow or even next tomorrow about what to look out for. Because from now henceforth, what I'm looking out for on dollar index is to keep saying it, give us lower, start giving us sell side delivery that starts going lower. Why the XY, the euro should start giving us what, buy side. That is risk off and risk on. So risk off and risk on. So let's go to the hourly contract and explain to ourselves what is there and how we can make use of that information as well. Okay, this is the hourly contract for euro US dollar. As you can see, we did take out that low at London session, and we created this low and in London session, and we price higher. We didn't take out this high, and markets retrace down and take out that London low at New York time. So this New York candle actually created the low of the day, which is 10 o'clock a.m. But I'll still refer to that later. And started saying the buy side delivery. So That being said, let's read the statements I have here. The Euro US dollar hourly contract delivered nicely and shows the perfect price delivery for Wednesday, 17 January 2024. Now, on the hourly, we can see that the euro swept both previous day low and the London session low before delivering higher prices, which is what I just explained now, that the yesterday previous low was swept and the new low that was created in London session today was also swept before was swept in the New York session before we see higher price delivery in euro. Now the on the hourly we can see that euro Oh, sorry. The daily profile is an obvious 6 o'clock p.m. New York local time as the high of the day, and that price above the short time buy side liquidity. While the low of the day is formed at 10 o'clock a.m. New York local time, that price below the fair value gap consequent encroachment before pricing higher. This is the candle I'm referring to, which is the low of the day, the price below the consequent encroachment, and you can see how the body of this candle are respecting that consequent encroachment. And immediately we get into that, we started pricing higher. So casting forward on hourly, we can expect to see this hourly bearish order block. Now, there's something I usually say that during buy side delivery, every down close candle should support price. So since we are now going in with the idea of looking for buy, then every down close candle should support the buy side delivery. So we have this hourly bullish order block here, and that should support price. And I want to see market trade above, then come down into it and go, which will also respect our daily view in price to for markets to price into this blue the high of this fair value gap. Well, that being said, let's go to the dollar index. So this is the hourly contract for the dollar index. We can see our buy side liquidity here and our sell side here, which is the short time range we are trading in, and the overall long time range is here, which is this low here is I refer to it as daily internal range liquidity, sell side liquidity, meaning that this is a sell side liquidity that is in on the daily time frame, which is an internal range liquidity for monthly and internal range liquidity for weekly. So there is a way I note my chart and all that. This red line here is the daily bullish order block, a bearish order block, sorry. And when price trade into with leave it, trade again, leave it. Now, one thing I you need to understand is that whenever price get to your PDRA, which is your high time frame PDRA, you shouldn't be such like most of the mistake I usually do is that whenever price get into my higher time frame period and it just leave it on either hourly or 50 minute or 4 hourly contract, I'll be so intrigued to enter to participate, but and I will get my ass taken out, almost take so many losses before the real price start to deliver. So now I tend to understand that whenever price get to that point, you should not even engage. Just observe and see how market is using that area, how it is pricing to it, come back, price to it, come back, price to it, and come back until you see a break of structure. Now, or a shift, not I don't even call that a break of structure, a shift in market structure. Just like this low now, if we take the low, then I can now expect market to come back to any of the hourly down close candle or up close candle. Here now we now refer to as up close candle. Any up close candle to hold price from going higher, then we can now utilize that area and look forward in lower time frame to engage. I hope this video is insightful and that you really did get the rightful information I'm trying to share here. And if that is it, please do give me a follow, subscribe to my channel, and give me a like on this video. And God bless you. And I will really appreciate because it will go a long way to support me. And you know, let help me reach out to more traders as well. Thank you for watching, and this is Digital Wealth Trading. All right. Good night.